This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Friday morning, last day of the week. Thank God it's Friday. I'm Prashant. With me, my colleagues Nigel and Sonia is back. Sonia, welcome back. How are you feeling?
Thank you. I'm feeling good, and I'm happy to be back, actually. After a couple of sick days, you know, it's always nice to come to the office and see all of you.
Look forward to a good weekend. Look forward to a good weekend and end of earnings season. You know, it's almost just few more days and we're almost done. This has been a difficult one, right?
You know, I don't think the viewers can see Nigel in his entire look, but he's dressed. You know how anchors are generally dressed, right? The top half is completely formal, but the bottom half is fully casual, ready for the weekend, right, Nigel?
Well, I think we should clarify. He's not wearing shorts. That much we should clarify.
They'll never know.
All right, well, let's kick this off. Let's kick this Friday off. We've got markets which are looking better, much better, I must say. And I'll start with, you know, the price action we had yesterday in India. So the Nifty saw, you know, the question is this, right? Is the pullback that we saw, when I say pullback, I mean the correction from the 15th of May to about the 19th of May, is that behind us? I mean, it's a minor pullback. It was not very large, but, you know, from about nearly 18,500, 18,460 or so was the high. The market did pull back to, you know, the low which we saw on the 19th of May, which was 18,060. We saw a bit of an uptrend from there, and then there was another correction, and all of that culminated with what we saw yesterday. And why am I saying this? Because for the second time in a short time span, the Nifty and the Bank Nifty, actually only the Nifty, not the Bank Nifty, have tested the 20-day moving average and then seen a clean, nice bounce. The last test was just last Friday. I mean, when the market actually had a big day, big intraday day, and we bounced 100 points. And then, I mean, over the next couple of days, we had a decent kind of bounce. So this is the question. I mean, if we were in a bit of a consolidatory, corrective, sideways pattern, congestion pattern, is that over with the price action that we've seen yesterday? 20 days, an important sort of, you know, trailing reversal level, short-term reversal level, that has been respected for the second time in short order. Okay, having said that, let me just quickly take you through some of the global cues as well. Overnight, U.S. markets rallied. And S&P was up about not quite 1%, just under that. Nasdaq was up about 1.7%. There is optimism around the U.S. debt deal. It's not done till it's done. Remember that. But you had the U.S. President Joe Biden reassuring markets and everyone that, and I quote, the staff is making progress. This is different from what we've been hearing over the last couple of days. To boot, data is strong. You know, just a few days back, we were looking at the initial jobless claims, which were showing weakness. The revised numbers show that, you know, it's pretty consistent with solid jobs growth. And that's the reason why the markets have been consistently pricing out rate cuts, pricing back rate hikes in. Yields are higher. The 10-year is at about 3.8%. The dollar index is past the 104 level. It hit a high of 104.3 something, and then cooled off a little bit. But, I mean, these are dramatically different levels as compared to where we were just about a month ago. For the Nifty, I think the levels don't change. The 20-day will still come into play. That stands at 18,224 now. It's moved up a little bit. And then, I mean, I think if the uptrend, as I've been saying, if the theory is correct that maybe this consolidatory pattern is behind us, these levels should hold. The 20-day and then yesterday's low, which is 18,202. These are supports which you could use for as pivots for trades as well. On the Nifty Bank, the supports come in at 43,546. That's a 20-day on the Bank Nifty. And then yesterday's low comes in at 43,390. And on the Bank Nifty, I mean, the all-time high of 44,151, I think, is the resistance to take out, to cross. It's been dithering. It's been kind of doing everything but take that out for the last many sessions. So that's the resistance on the upside. Sonia.
Absolutely. And I think today, although the SGX Nifty is suggesting a slightly weakish start, the trend has largely been on the upside. And I think the street could latch onto that, perhaps some buy on dips as well. So in the last 1 month, if you just map the trajectory in May so far, the Nifty is up almost about 3% odd. A large part of it, of course, has been done in the last fortnight itself. But the question that we're asking this morning is whether the Nifty can take out that resistance zone of 18,400 to 18,450. That's the big question to ask. Now, the good part is that both foreign and domestic investors have bought in the cash market. So, FI has bought about 600 crores, DI has bought 300 crores. So, that momentum is kicking in. And, even in the global markets, if you look at what happened with the Nasdaq, tech stocks rallied overnight after very good results that came in from Nvidia. And, of course, the whole semiconductor situation has improved, and hence there was stronger than expected revenue guidance and an earnings beat from Nvidia, which the street likes. Back home, we are at the fag end of the earnings season, so it's the last leg, so to speak. A lot of, weak numbers coming through, whether it's Z Entertainment, whether it's Page Industries. Both sets of numbers were on the weaker side, and the street would react to that. And a lot of important results to react to today. So there's M&M, BHEL, Samvardhan Motherson, there's Sun Pharma, there's BEML, there's ONGC. And, a couple of these names like Sun Pharma could come out in the afternoon, so the street will react to them in market hours itself. But the SGX Nifty for now is hinting at a muted start. Looks like we could start on the back foot, but this has in general been a buy on dips market. So if the dips get bought, I guess that wouldn't be too surprising today.
Well, that's right, Sonia. Yesterday, a typical expiry played out because still around 245, 250 odd, we were hovering around that 18,250. And once we got past that 18,275, we saw that additional fill-up. Just take a look at that. For bulk of the trading session, we were in that vicinity of around 18,200. So maybe we're returning back X of the expiry day. Now, we've closed in the green in the May series. Last two series have been in the green. The bulls are hoping for a hat-trick this time around in June. Let's see how that plays out. Now, in terms of positioning, the Nifty total open interest, the previous few series at the start of it, it's been around 1 crore. Now, May was relatively light. June is a little bit heavier than May, but it's still not at that 1 crore odd on the Nifty open interest. So we're still in a relatively lighter market. The Nifty has been in a 400-point band for the entire of May. We've been at around that 18,050 odd, all the way to around 18,400. And entire May, we haven't broken that 400-point range. Now, the FIs at the start of the series, they're net long. For the first time since Jan 2023, they are net long. Just pull up the data points. The FI positioning on index futures, this time around, it's close to around 58%. The prior couple of times when they were net long to this extent was December as well as January. Is it such a good thing? Well, in December and January, in fact, the markets ended in the red. So you'd like to have some FI short positionings in the system. In fact, in April, their short positioning was the highest, and we had one of the best series. The Nifty was up close to around 5% odd. So let's see how this one plays out. But otherwise, you will want some short positioning in the system so that you get a bit of a bounce out there. On the option side, the highest open interest is at around 19,200. Maybe some of those call buyers, they are hoping that you get a debt ceiling, that gets raised. You have a dovish Fed, and you maybe get a dovish RBI as well. That's why that's some out-of-the-money call buying that we're seeing out there. On the downside, though, the 18,300 put, that becomes very important because it has the highest open interest on the put side. And yesterday, you saw some writing. 18,200, 18,300 put, both of them did see some writing. While on the upside, the 18,300 call as well did see a fair bit of open interest build up with the premium at around 126 rupees. So just plug in the numbers out there. The 18,300 put, that saw some writing. The rough premium out there was around 80 rupees. So you deduct 80 from around 18,300 and you get, the broad range that you're looking to get in, or the support zone. 18,200, 18,220, it coincides with the 20 DMA. And on the upside, 18,426 becomes important because 18,300 call did see, a fair bit of open interest build up. SGX Nifty is indicating a bit of a pullback. Maybe you get a little bit of a deeper gash. But if you're looking to buy the index, 18,200, 18,220, you'd like to get in closer to those levels and keep a stop loss at around 18,200. Yesterday it worked. Let's see whether or not the bulls can go home on Friday in party mode.
All right. That 20-day has been defended successfully, and will that bring good news as we go forward? That's the question. Well, before we go any further, let me quickly run you through what's lined up in the first 30 minutes of the show. We get you updates from markets across the globe. Gary Schlossberg of Wells Fargo Investment Institute will join in to discuss the global setup. We'll have our research team get you CNBC TV 18's list of top 10 stocks to watch. And Amisha Vora of Prabhudas Leather will join in with some stocks she likes and, of course, comments on the earnings which we've seen overnight as well.
Okay, well, we have some very interesting, macro views coming through on the market this morning. So we'll get straight to that in a bit. First up, we have a view from Santanu Sengupta of Goldman Sachs, who expects a strong trend in services exports and lower merchandise exports to continue. and a boost to net exports in CY23 with real export growth above 4% year-on-year. Most of the capex push in the economy is currently being led by the central government, while private sector investment remains tepid. Goldman Sachs is forecasting a lower investment growth of 7.9% year-on-year in calendar year 23. They are also expecting government expenditure to pick up in Q4 before the general elections in mid-2024. In the backdrop of all this, they expect the Q1 CY23 GDP growth at 4.9%, and for the full year, they are increasing the estimate by 30 basis points to 6.3%.
Okay, well, equity call. Chris Wood of Jefferies writes a greed and fear note. He continues to take the view that it will be only a matter of time before the sensex reaches the 1 lakh level. This target on a 5-year view now assumes trend 15% EPS growth, and that a 5-year average 1-year forward P multiple of 19.8 times is maintained. Now is the time to add exposure to property stocks if it is believed that the end of the Indian monetary tightening cycle is at hand. As for the India long-only portfolio, an investment in Zomato will be introduced with a 4% weighting, while investment in HDFC Life Insurance will be removed. The investment in REC will be increased by 2 percentage points by shaving the investment in ONGC. They've also added Zomato to the global long-only equity portfolio, and this will be paid for, he says, by shaving the investments in JD.com and Alibaba by 2 percentage points each.
That's interesting, right? The chatter is growing now on Zomato, picking up pace, and ONDC doesn't seem to be too much of a threat, at least at the moment.
Yeah, Zomato or Zomato?
We all saw that ad, right? Okay, let's get you some money market views as well. On the rupee, you have Lakshmanan V of Federal Bank, who says that Germany has slipped into technical recession. Euro has plunged to a 2-month low. In the US, stronger than expected GDP data helped the US dollar surge to a 2-month high of 104.2 levels, resulting in the Japanese yen, the Chinese yuan, and the Australian dollar trading at 6-month lows. The rupee, however, is well supported around 82.90 levels. He expects the rupee to trade in a range of 82.60 to 83.15 for the next few sessions.
Okay, in bonds, we have Lakshmanan V of Federal Bank, who says that the bond market has been in a tight range of 6.98 to 7.02% despite debt ceiling concerns, which had caused US yields to rise to 3.75%. The domestic bond market has been steady with buying interest emerging above 7%. He expects yields to trade in between 6.95 to 7.05% range before a directional move on either side.
Well, we have a lot of stock-specific action, which we get to in just a bit in our special Top 10 segment. We're looking at Vodafone Idea, eClerx Services, Radico Khaitan, Aster DM, MedPlus Health, and ITD Cementation. Their stocks on the back of positive news flow, while on the flip side, you have ZE, Page, Sale, and Emami. They'll be reacting to negative results overnight.